Well, the key focal point continues to be moves around Brent, WTI. The fact is, I think we're getting to a point now where we can start looking at contrarian trades around those front month contracts. And I think, whilst the preference is obviously to see price stabilise, see some buying coming back in, and then jump onto momentum to the upside, I think we are getting to that point now where we are going to see better upside. If you look at the Iranian oil minister overnight, he did talk about, there's a wider discussion within OPEC about looking to cut the production rate. You're starting to see high yield credit spreads starting to widen, which will disincentivise a lot of the energy and petroleum companies in the US to increase the rig count, which of course has been a big tailwind for the depreciation in the oil price. But if you look at the Australian equity market today, we've seen good buying in banks, but it's been the energy sector which has been the real big surprise. We saw oil prices heading even further lower, but yet the energy sector here in Australia is actually up about 80 basis points. Now, a large of that amount is down to short covering. We've seen a lot of traders who have been short the sector and short various stocks such as Santos and Oil Search who are taking profits, and of course that's pushing prices a bit higher. But I think there are a few brave souls who are saying enough's enough. We've seen the sector down 13% in the last few weeks. Oil price obviously are very low, and that's suggestive of why we're seeing that. But at the same time, perhaps this is a time where we can start looking at contrarian positions, and we may see this as a longer term trade coming through. Of course, my preference is to see that price stabilise, but we are seeing some buying in oil stocks in Australia, and I think that's really interesting given that the price is still very much in free fall territory and you're catching a falling knife. Gold stocks are doing okay. I mean, we've seen the gold price stabilise. It's moved back above 1250, and that could be an interesting one. Of course, that's going to be determined really on real rates and whether we see real rates falling from where we are at the moment, and that would be good for gold. If we see real rates moving up a little bit, then of course you are going to see gold coming back under pressure again. Japan's market's doing okay. It's holding in despite dollar yen pushing and testing that 111 level. There's been some dollar outflows there, so some yen inflows, should we say. The yen's done quite well throughout today's session. One of the big talking points also is the RBNZ. We've seen the RBNZ meeting at 7 o'clock our time, and they've come out with a fairly neutral assessment of monetary policy. It hasn't really changed too much from last month, but I think the market had gone into this somewhat dovish, positioned on the dovish side there, and they've had to cover some of those short bets there as well. So the Kiwi dollar is probably the best performing currency in G10 today. If you have a look at Aussie against Kiwi on a daily, it's pushing 104, and there's a nice double bottom in play there as well. So we want to see a close below 104 to suggest that we're going to see much lower downside from there as well. So an interesting session. ASX stocks doing quite well, Japanese stocks holding in there, Chinese stocks doing quite well. Again, we've seen some follow through buying there. I still like Chinese stocks higher over the remainder of the year, but ultimately the lead in for Europe is somewhat mixed, and our calls for European equities are reflecting that at the moment.